You are constructive on China. That's been the big shift in your strategy. But how much downside risk is COVID zero?
COVID zero has been a kind of a stop-go kind of situation, if that's what it is presented as far as China's policy is concerned. So, for the time being, it would remain a concern, no doubt, though we don't expect a full lockdown, the kind of situation that prevailed during the March to May period, because we think that the concerns about employment, or rather unemployment rate reaching a historic high, is possibly quite prominent. It's quite front and center in the policymakers' radar right now. So, we think that gradual reopening in a calibrated fashion and, more economic stimulus through both fiscal and monetary measures would possibly be the focus of policymaking in the second half of this year.
What sectors in particular, then, do you think could potentially hedge against the stop-start nature of COVID zero and the impact on the economy?
Two major themes that we are playing in China are the so-called policy beneficiaries, the high-end manufacturing, infrastructure, and the banks which are catering to funding these areas. So to that extent, we have significant presence in the SOE banks. We have significant presence in some of the tech hardware companies, and also some of the EV, the electric vehicle manufacturers, and the entire supply chain. So that's the core theme we're playing in China, but we have incrementally added to our China internet and e-commerce exposure as well, because we feel that the worst of the domestic regulatory pressures are possibly behind us.
So more broadly, you are positive on some other areas of Asia, and one of them is Korea, where we're getting ready to see more aggressive rate hikes. Another one is India, where there's some question about how much they'll have to move their rates up, particularly when it comes to preventing capital outflows and preventing bonds from getting the yields pushed so high. How do you factor those into the equation?
Right. So as far as Korea is concerned, no doubt the big chunk of the Korean market, that's the tech, hardware, memory, and semiconductors, they have faced the brunt of selling pressure on account of concerns about recession in the developed markets. But we think that apart from the PC and smartphone supply chain, there are other ways, there are other avenues of growth as far as memory and semiconductors are concerned. We are seeing increased demand from AI-related applications, from cloud, from data centers, and so on. The recent discussion by some of the semiconductor manufacturers in Taiwan actually underscores that. Also, as a consequence of the interest rate increase, the Korean banks would continue to have net interest margin expansion. India is a bit of a tricky area right now. As you rightly highlighted, there's a lot of capital outflows from the foreign institutions leading to depreciation of the rupee. On the other hand, the domestic economy is recovering rapidly, which is reflected in the total quantum of freight traffic and also on the tax collection by the government, which is growing at about 25 to 30% year on year. So, in case of India, there are ways of playing that through the private sector banks. Also, the currency depreciation tailwind should be felt by the IT service exporters over there. So there are, it's a reasonably sized pockets to play that market.
It's interesting. So many things like a currency depreciating swings both ways, doesn't it? It could hurt consumers, and it could certainly help certain kind of manufacturers. What about Indonesia and Thailand? That's also where you're overweight.
Right. So Indonesia is relatively simple. It has been the best performing Asian market this year. That's the only market that has delivered positive returns in a sea of red. And as long as commodity prices remain reasonably buoyant, particularly fuel prices, I think both the current account and corporate earnings should continue to do better. In case of Thailand, that's a more nuanced exposure that we have. We think that towards the last quarter of this year, tourist footfalls would begin to increase, easing the pressure on the currency and the current account. And also, there are some policy-related impetus going on as far as electric vehicles and new energy is concerned. So there are interesting pockets to play in Thailand, which we are making use of.